quarter, and I think we'll wait for a trend to emerge before we actually see that provisioning for the year will be low.
Yeah, Suchi, just hanging there, we've got Vaibhav Agrawal also joining us. Vaibhav, your first thoughts on the known asset quality numbers, and what would you watch out for? Would you hold back your comment till you see the fresh slippages and the amount of refinanced funds?
Well, certainly we would wait for the restructuring and refinancing numbers, but overall it does look like, the slippages would have been, contained because neither the net NPAs have gone up, and even the provisioning is more or less, in line with what we were expecting. So at least on the slippage and on the net NPA numbers, the numbers do look much better than what we were expecting, and the run rate that they've been doing throughout FY15 in all the quarters. Compared to that, this is clearly much better.
Okay, Vaibhav, I know it's a little bit of a tough question, but if the slippages are, say, sub 3,000 crores or 3,260 crores lesser than what they did last quarter, and that's what it seems like from the numbers at this point, but the refinancing when the commentary starts is higher, do you then expect the stock to possibly correct or be contained in terms of incremental gains simply because of that?
Well, not necessarily, because, ultimately slippages versus refinancing cannot be painted with the same brush. The amount would matter for sure, but it does look like slippages would be much lower than 3,000 crores unless they've had some very large recoveries or, sale to ARC, but otherwise it looks like the slippage number would be much better than the 4Q number.
So what has stood out for you in this number, Vaibhav?
So, like I said, primarily, in the last, if you see, throughout the course of FY15, they saw an almost 3,000 crore increase in net NPA. From there, to see a decline in the net NPA percentage would certainly be a positive surprise.
If I was looking at the ICICI Bank gross NPA in the first quarter of FY15, it stood at 3.05%, and it's risen all the way to the levels that we're seeing at this point in time for ICICI Bank, 3.68%. And if you look at an axis, it's only worsened 4 basis points. So there is that difference in terms of the gross NPLs, and the stability that is coming for ICICI Bank in terms of the gross NPLs on a sequential basis is the reason why there could that the gap between the two could possibly narrow. Vaibhav, what is your call between the two, ICICI Bank as well as Axis Bank, in terms of performance, as well as maybe your choice between the two stocks and the reason why?
Well, actually, at this point, we do have a buy on both these stocks, but the fact remains that ICICI Bank is trading at almost more than a 25% discount, on the price to book multiple to Axis. If you look at their loan books, apart from the overseas part of it, there is a lot of, similarity. It's just that ICICI Bank does have slightly more exposures to metal and infra to an extent compared to Axis. Otherwise, there's a lot of similarity on their retail franchise as well. If they can sustain these kind of numbers, then there would be some scope for this discount to possibly narrow in the coming quarters.
Vaibhav, how would you rate this line? The net loans to companies whose facilities have been restructured has gone up by nearly 15% on a quarter-on-quarter basis at 12,600 crore. What would your reading be on this statement?
Last quarter the cumulative number was around 11,000 crore. So there is a 1,500 crore increase in that. But if we would still wait for the slippage number. But the total stressed addition in 4Q was 4,400 crores. So it would still appear that the total stressed addition this quarter is lower than that.
Okay, and what about slippages from the restructured book? If they are as high as they were in Q4, would that worry you in terms of a trend for ICICI Bank for the remaining part of the fiscal?
It would be worrisome, but looking as of now, prima facie, that's likely not to be the case. But again, we would wait for more details, on the con call.
Okay, the stock, at one point of time was hovering near levels of 380, 390 as well, and from there it fell below 300. Based on these numbers and what we know, how much do you think the stock could rise? How much lost ground can it recover?
Well, I can tell you my target price, that is at 370 rupees. So, from these levels, we do see a decent upside, but that is, over a 12-month period. But in the near term as well, with these numbers, the stock could see a little bit of a more sustained rally from where it is currently as well.
Okay, so Vaibhav, just leave us with what your last take on ICICI Bank is in terms of the P&L that you've studied, what you'd like to hear in terms of commentary from the management this afternoon.
So, the P&L, clearly the bottom line is largely in line, but unlike the previous quarters, there has come along with, the net NPAs being contained, so that is a positive. And obviously what we would wait for the management is what their overall stressed addition, outlook remains for the rest of the year, and whether they sound more optimistic than they were in the fourth quarter.
Okay, all right, Vaibhav, we leave it on that note. Thanks very much for joining in and talking to us. So it has been a good quarter, at least from the P&L front for